And a very happy Friday to you at 12:07 in the West. Talk Radio 790 KABC, the John Phillips Show. Broadcasting live from the Morongo Casino Resort and Spa Living Room Studios. Mr. Randy Wang has the day off. He'll be back with us on Monday, assuming his flights are on time, they don't cancel, and he doesn't get stuck in Dallas. 800-222-KABC is the telephone number, 1-800-222-5222. Coming up at 12:35, we're going to speak with a man who was once the insurance commissioner, the elected insurance commissioner here in the state of California, who is going to break down just exactly what's going on in the insurance market here with Allstate and State Farm pulling out of the market for new policies, other insurance companies pulling out for commercial policies. What's going on in the insurance world here in California, and will more companies follow suit? All those questions will be answered coming up after the news at 12:30. But first, the big story nationwide today is a scandal that's brewing around New Jersey's Senator Bob Menendez. Federal prosecutors charge Bob Menendez, a Democrat of New Jersey, and his wife with violating corruption and bribery laws. This according to an indictment that was unsealed in federal court earlier today. According to the indictment, Menendez, who chairs the powerful Senate Foreign Relations Committee, and his wife, Nadine Menendez, are accused of engaging in a corrupt scheme alongside a New Jersey real estate developer and a man who runs a halal meat certification business also in the state of New Jersey, and another businessman. The bombshell indictment included sprawling allegations against the senior Democratic senator involving a scheme to aid the Egyptian government, gold bars, money stuffed in envelopes, and illicit halal certifications. In a lengthy statement following the indictment, Menendez denied any wrongdoing and said that forces behind the scenes are working to silence him and dig his political grave. He added his behavior laid out in the indictment was well within the realm of his office's authority, which is essentially the same argument that we heard from Mark Ridley Thomas, the same argument that we heard from Sheila Kuehl, the same argument that we heard from Curran Price, and many others. What I was doing was not illegal. What I was doing was business as usual. Everyone does it. Why are you bothering me? And there's a lot that's in here that's interesting. First and foremost is the timing of when this happened. Because let me tell you, everyone in Washington, D.C. has known that this man is a crook for decades. It's not that big of a secret. I don't follow what's going on inside that Congress closely at all, and I knew the guy was a crook. If I knew the guy was a crook, then everyone in that Capitol dome knew that he was a crook. Everyone in every media shop in Washington, D.C. knew that he was a crook. Everyone in the Department of Justice knew that he was a crook. And everyone pretty much down to the elevator operator in that district knew this would happen someday. So the question is, why now? And that's always the question when things like this happen, especially when you look at the ridiculousness of what is being exposed here, or what is being alleged, I guess I should say. They're paying him off with gold bars and envelopes full of cash, like it's some kind of scene out of the Pirates of the Caribbean at Disneyland. What, is he chasing a woman around with a tray too? Gold bars are something I haven't even thought of since I watched DuckTales and Scrooge McDuck used to collect them. So you say to yourself, why is it that you would pay off a politician with gold bars? Well, the answer is gold bars are hard to trace. Think back to the Mitch Englander scandal and the Jose Huizar scandal. Both of those scandals took place in casinos, in part because they were bribing them with poker chips. Poker chips are very difficult to trace. There's no electronic record of when a poker chip exchanged hands. It's easy to launder money that way. So if you're taking someone that you're bribing to a casino and you get a bunch of poker chips and you sit down at the table and you play, you're up a little, you're down a little, whatever the case may be, you go to the bathroom and suddenly they have the poker chips. No cameras in the bathroom. No record of that money being exchanged. They got caught because they were so gross about it that they offended the people that operate the casino. So let that sink in for a while. The LA City Council is so corrupt, they offended the mob. You don't want to pay off a politician with a check. You don't want to pay off a politician with a money transfer, a wire transfer. You don't want to pay them off with a credit card because there are records of that. Every so often, you'll see someone get in trouble because they hired a hooker and paid for it with a credit card. Imagine being that cheap. You are so cheap, you're paying your hooker with a credit card so you don't miss out on the Hilton Honors points. And people get caught that way. And I would imagine they get caught that way all the time. But why now? Why is it that if they have had this information and known that this guy was dirty for so long, did they choose to act today? September 22nd, 2023. And you may be asking yourself the question, John, why is it that you say that everyone knew about this and has known about this for years? And the answer is because that's how it works. Everyone thinks, because of the movies and television, that the feds are tapping our phone lines. They are watching us from a van down the street. They are above our homes with black helicopters and listening in to our private conversations. And that's how they find out when people do things they shouldn't be doing. That's what happens in the movies. That's not typically what happens in real life. In my experience, how these things start is very different. Here's usually what happens. There's no honor among thieves. Meaning, if you're willing to steal from the people, you're willing to steal from just about anyone else too, including the people who you're related to, who you're in relationships with, who work for you, who contribute to you, anyone around you in your orbit. And what usually happens is this. At some point, the primary criminal, the elected official, alienates someone in that group who knows where the skeletons are. Maybe they're having an affair with them and they cut it off and the person feels upset. Maybe they were sharing the spoils and at a certain point they decided, why am I sharing with you? I'm doing all of the work. I'm the elected. You deserve less than what I'm paying you, or you deserve nothing at all. Maybe they have a falling out over something personal. They get drunk one night at a bar. They exchange words. They get involved in a fight. They don't like each other anymore. People don't mind being used. People mind being discarded. So when the primary criminal discards someone, they're angry and they're looking for revenge. Typically, when someone is angry and looking for revenge, they don't go straight to the feds. Because if you go to the feds, you better be clean as a whistle, or you might end up getting yourself in trouble. We've seen this happen before. In fact, it happened here in the state of California with the shrimp scam issue, where the Republican leader in the assembly at the time, Pat Nolan, was convinced that Willie Brown was taking bribes. So Pat Nolan goes to the feds. The feds work together and come up with a sting operation. Willie Brown passes the test, and Pat Nolan ends up going to prison. That's what happened there. So people are afraid to go to the cops, and they're specifically afraid to go to the feds. Because if they haven't been paying their taxes, or they've been taking illegal money, or they've been doing something that violates the law, they would get in trouble too as collateral damage. So what do they do when they're angry and they're looking for revenge? They go to the news media. Because if the news media runs a story that a politician is corrupt, that will damage their prospects for winning re-election. And so you go to a reporter, you go to someone on television, you go to someone on the radio, and you bring them all of this evidence and you say, look at this person, look how corrupt they are, look at the illegal things they're doing, write about this so you can stop them from abusing the public trust. And when this person in the news media writes about it, what happens is the feds read the article, or whatever agency does the investigating reads the article. And after they read the article, they follow the headlines. It's not that the FBI or it's not that the sheriff is starting the investigation. No, that happens in the news media. They read it, and then it becomes on their radar. So after it's on their radar, they then call the person who wrote it. They call the people who were mentioned in the article. And the people who are mentioned in the article call the reporter and tell the reporter that they've been contacted by the feds, and the feds have a lot of questions about whatever it is that's going on. And the reporter is a member of a small fraternity. There aren't that many of us, and there are different ecosystems. In Washington, D.C., there's a group that covers the Senate. There's a group that covers the House. There's a group that covers the White House. In Los Angeles, we have a relatively small press corps. So when the feds call someone in the local media asking about a story they wrote about some local politician, guess what that person in the media does? They tell all of us. So we are very well aware of who's being looked at by the feds, who's being looked at by the local authorities. And when they end up getting popped, it's no surprise to any of us because we have known about it for years. If you remember the current price situation that just broke not that long ago, I was the least surprised person on planet Earth when I read that news. I had known that they were investigating him for a very long time. What you don't know is when they're going to act on it. Sometimes it's as simple as the government just taking forever to build their case because they never want to go to court unless they know they have a slam dunk case. Other times, there are different factors that impact when they move forward. With the Joe Biden Justice Department, I believe they are fundamentally corrupt. And if you're fundamentally corrupt, then partisan influences will impact when you move on something like this. Because, again, going back to what I told you at the beginning of this segment, everyone in that town knew that this guy was corrupt for years. For years. But this is when they chose to move forward. This is the date that they decided that they were going to crack this wide open. And the only thing I can think of, and they've done this before in New Jersey. New Jersey people think of as being a deeply blue state. And for the most part, they vote Democrat in presidential elections reliably. But you look at what's been going on over there recently, and I don't know if it's related to COVID. I don't know if it's related to whoever is immigrating there from other countries. I don't know what the deal is. But the political partisan registration in that state is falling off a cliff for the Democrats, and it's moving in the right direction fast for Republicans. In the last gubernatorial election, that wasn't on anyone's radar, and the Democrat almost lost. You had the president pro tem of the Senate there, the state Senate. He ended up losing to a truck driver who wasn't even really actively campaigning. When things like that happen, there's political change going on in that state that people weren't picking up on. Now they're picking up on it. statewide elections in New Jersey were not regarded as being particularly competitive until recently, and the Democrats just got the scare of their life when their incumbent governor was running for re-election and almost lost. Bob Menendez would probably lose re-election if he were to run for another term in 2024. All indications were he was, and Republicans could pick up that seat. If Republicans pick up that seat, I don't see a scenario where the Democrats win control of the Senate because the map is very tough for them next time around. If they're going to keep that seat, they need a strong candidate who doesn't have baggage, which means you got to get rid of Bob Menendez. And as I said, they've done this before. There was a guy who was in the U.S. Senate in New Jersey who was also completely corrupt. His name was Bob Torricelli. And he was in danger of losing his seat to a Republican when he was on the ballot. And what Democrats did there was they just knocked him out after the primary and replaced him with a former U.S. Senator who was 912 years old by the name of Frank Lautenberg. And they put Frank Lautenberg's name on the ballot, who had run statewide before and won, and he was able to keep the seat in their column. They had to do that because if they didn't do that, Bob Torricelli was going to lose. This time around, they didn't wait until the 11th hour. They did it more than a year before the election so that way they could get him out of the way and someone without baggage could run and keep that seat in their column, and they could, in theory, have a better shot at keeping a majority in the U.S. Senate. I don't believe the timing of this indictment is arbitrary. I think this is a highly political Department of Justice, and they chose to do it now. Again, it's like calling holding in the NFL. They could have done this anytime they wanted to do it. They're doing it now because now they can get him out of the way, put someone stronger in there, and then keep the seat. That would be my guess. Because there were no surprises, there were no secrets that all of this was going on. By the way, the wife was indicted. That doesn't usually happen with politicians. I was reading up on how these two met. They haven't been a couple for long. They apparently married in 2019 after he met her at an IHOP in New Jersey. How the hell do you meet someone at an IHOP in New Jersey? It's not like there's a bar or a lounge where you could stand there and talk to strangers. Did she walk up to him as he was enjoying his Rudy Tooty Fresh and Fruity and say, "Senator, are you happy to see me? Or is that a container of blueberry syrup in your pocket?" Maybe that was the come on line that did him in. I don't know. He proposed to her outside of the Taj Mahal in India. So maybe Eric Garcetti will be the ring bearer, or was the ring bearer. I don't know. And when he proposed to her, he did it while singing, and someone was videotaping it, and then they put it on social media. So it was like having your birthday at El Torito. It's not looking good for the two of them. It never is when envelopes full of cash or gold bars are involved. But I'll tell you, it doesn't make me feel more confident in our Department of Justice either. It reinforces everything I already thought about them, which is that they are highly political, and politics clouds every decision they make. If you'd like to email the show, you can do so at johnnydon'tlikeshow@gmail.com. That's johnnydon'tlikeshow@gmail.com. And if you'd like to listen to the podcast edition of this show over the weekend, that's easy to do. Just whip out your handy-dandy smartphone, click on the podcast app, and search for the name of the show, The John Phillips Show. Click subscribe. All of the editions will be downloaded to your phone automatically, and you'll have access to them whenever you'd like to listen. Also, a reminder that our pal Doug McIntyre will be at the Barnes & Noble on Sunday, that is this weekend, between the hours of 2 and 4 in Burbank. He'll be reading passages from his book, Frank Shadow, signing copies, taking pictures. So if you're in Burbank and you want to see Doug McIntyre on Sunday, that's at the Barnes & Noble between 2 and 4. Coming up next, we're going to talk to Dave Jones, who's the former insurance commissioner here in the state of California. Just exactly what the hell is going on with the insurance market here in the Golden State, we'll explore. But first, headlines. The Fix California Hour coming up after the news at 1. Right now, it is a pleasure to welcome our next guest to the program. He is the former insurance commissioner, the duly elected insurance commissioner for the state of California, Dave Jones. Insurance Commissioner Jones, thanks so much for joining us.
Great to be with you, John.
First of all, we really appreciate you making yourself available today because the insurance market here in California has so many homeowners, so many people worried right now with State Farm and Allstate pulling out of selling new policies, other companies pulling out of the commercial world. People are worried that they're not going to be able to buy an insurance policy for their home should they need to. We get calls all the time from people who have been dropped from their policies, even if they've been there for a very long time and they've never filed a claim with their insurance company. So people right now are biting their nails on this subject. And with so much going on, the current insurance commissioner, Ricardo Lara, is not really doing a lot of media. He's not, we reach out to him, he won't come on. Other shops here in Los Angeles have reached out, he won't go on and explain it. And people are at a point right now where they really just want to absorb information and realize just exactly where we stand and where we are. So I really appreciate you coming on here today. First question is this. How fearful are you that more companies are going to pull out of the California market?
What's happening is that because of climate change and rising global temperatures and temperatures in California, we're seeing more frequent and severe wildfires that's killing more people, injuring more people, destroying more communities, and also causing insurers to have to pay out larger and larger sums of money. Insurers are rational economic actors. They're in business to make a profit. If they can't make money writing insurance for a particular home, then they won't renew it or they won't write new insurance. And this problem is not unique to California. This is happening in Florida, Louisiana, other states across the United States based on the nature of the risk. And what's happening is the risk is going up because we're not doing enough to address climate change. Now, Insurance Commissioner Lara made an announcement yesterday regarding a new set of regulations he plans to introduce and try to adopt, which would, if I can kind of break it down in its most straightforward components, would allow insurers to raise rates in exchange for them agreeing to cover collectively about 85% of the highest wildfire risk areas. Whether that's a good deal or a bad deal remains to be seen. I think there are going to be hearings on this and an opportunity to do the math and try to figure out, gee, what does that mean? Does that mean more homes will be insured or less homes will be insured? But he did make this announcement yesterday, and it is big news in terms of insurance regulation in California because it's an effort to try to address this problem.
You hear from the insurance companies, and they cite two issues as being a problem for them in this market. They say that because of the regulations and because of the way that California allows them to charge consumers, they cannot pass on their cost to the consumers, and because of that, they can't make money. And they have a fiduciary responsibility to their shareholders to make money, and if they can't do that because of the way we regulate how they can charge us, then that's no good for them. The other issue that they cite is that the cost of materials in California is much higher than it is in other places. So if there's damage done to a structure because of a fire or a flood or whatever the case may be, it costs them so much more to repair it in California than it does in other states that they can't make that money back.
So it is true that the cost of labor and materials is going up in California. So to the extent that homeowners recognize that and seek more insurance, then they have to pay more for that insurance. And it does mean on the back end, when the wildfire occurs and burns down a bunch of homes, that the payouts are bigger for the insurers. But that's true in many other housing markets across the West also. The other issue that they raise is that they're not able to recover their reinsurance costs, and they're not able to use catastrophe models to set their rates. And so what Commissioner Lara has announced is a regulation that would allow them to include their reinsurance costs in their rates, at least the California component of those reinsurance costs, and allow them to use catastrophe models in exchange for them agreeing to cover roughly 85% of the high-risk wildfire areas. What that means is that rates are going to go up. It, I think, remains to be seen, and we have to get into the details once the hearings start, whether or not this is a good deal in terms of expanding insurance coverage. And remember, too, that those regulations you've described, which do allow for rate increases when the insurers justify the increases based on their experience, and they've been getting rate increases over the past couple of years, substantial ones, because their losses have been going up. But those regulations have, in most years, allowed the insurers to make a profit and save ordinary Californians billions of dollars, versus nice places like Florida, where the rates are 3 or 4 times the national average, and the insurers are still pulling out. So I think, it remains to be seen whether what the commissioner has proposed is a good deal for consumers, and I think the devil's going to be in the details. One thing that is missing, though, John, one thing we know in California and throughout the western United States is that if we better manage our forests using prescribed fire and thinning, not clear cutting, but thinning, and get rid of all of the ladder fuels that are in the forest that allow the fires to climb up to the crowns of the big trees and then cast embers for great distances and cause these huge, huge wildfires. If we better manage our forests, we can knock down that underlying risk. And it's been proven, too, that forest management at a landscape scale can be taken into insurance modeling and demonstrably reduce insurance losses. Right now, the insurers are not accounting for the billions of dollars that the federal government and state is spending on forest management. They're not accounting for it in the models they use whether to write insurance or not. That needs to change. That wasn't part of the commissioner's proposal, but that's really something that needs to change, because communities should get the benefit of what taxpayers are investing in forests to reduce their risk, and that benefit should be captured in the insurance models. It's not, and then that benefit would be a path then to keep insurers in the private market. So that's a part of what's been proposed that I think is something important that needs to be added to what's been proposed.
The Camp Fire was the deadliest fire in the history of the state of California. That fire was started by PG&E. They were held criminally liable for that fire. They had faulty equipment that ignited that fire. We know, of course, that PG&E, Southern California Edison, and other electric companies here have been responsible for starting fires that have caused millions, if not more than that, dollars worth of damage. How important is it in terms of keeping this insurance market healthy for the Public Utilities Commission to really lean on these insurance companies to get them to fix their faulty equipment and stop starting these fires?
So there's no question that there is more work that needs to be done by the major utilities in California to reduce the risk of their starting fires. The good news is, though, that various ones of them are taking steps to address that issue. PG&E, for example, has been engaging in a systemic and comprehensive effort to try to create more fire breaks around its major transmission lines and distribution lines and transformers. And what they also concluded, though, at the end of trying to do that for the last couple of years, is that the biggest way to reduce that risk is to underground those major transmission wires. That's going to be expensive. And that's going to be controversial because people are not going to want to see their electricity bills go up in order to pay for that. But those sorts of approaches are very, very important in order to reduce the risk that the utilities cause these wildfires. So no question that state regulators need to stay on top of the utilities. Utilities need to follow through in order to make sure that they're not starting wildfires that take people's lives, property, and destroy communities, as has been the case in the past.
How high of a priority would you put on clearing out the homeless encampments, too? Recently, the fire chief here in Los Angeles said that in Los Angeles, 50% of the fires that they respond to are started by the homeless encampments. Of course, many of these fires damage nearby structures, whether they be homes or commercial businesses, and then that turns into an insurance issue.
Well, I don't have any data for you on what percentage of insurance losses are the result of unhoused individuals starting fires. I do think that to the extent that that is going on in Los Angeles and other geographies, that's another reason why we've got to build more affordable housing, get more shelters deployed, and get people off the streets.
And then, of course, we have insurance companies who are now asking consumers to do things that they've never had to do before. We took calls from listeners who said that insurance companies asked them to take pictures all around their property, inside their property, to show the insurance companies what it currently looks like. There have been cases where insurance companies have been sending drones over people's homes and saying, well, we're going to drop you because it looks like your roof needs some work on it, or you have too much junk in your backyard, those sorts of things. What are your obligations as a consumer if your insurance company comes to you and asks you to take pictures of your house, or they send a drone to take pictures for themselves? Is that kosher?
So it is a private contract that you're entering into with a private corporation. And so they can ask for these things. You can reject it, but then they can also decide they're not going to insure you. It used to be that insurers, and this is decades ago now, would just redline whole areas and say, the risk is too much in this entire area, we're just not going to write. The good news is now they're looking home by home, which does mean, though, that they're asking more questions of homeowners with regard to defensible space, attached structures, what's your roof made of, what's occurring with regard to the structure of the house and surrounding it. The reason they're doing that, though, is because they're making decisions on a home-by-home basis as opposed to just redlining entire geographic areas. So, the good news is they're doing it home-by-home. The challenge for consumers is it means that they need to do things to try to reduce the risk. Some of those questions are intrusive, no doubt. It's up to you whether you want to do it or not. But then at the end of the day, it's a private contract, and the insurance company can decide that they're not going to insure you. Now, having said all that, there is an insurer of last resort called the FAIR Plan, which was set up by the state to cover homeowners who can't find regular private home insurance. It's expensive because it's covering all of the risks that the regular private home insurers don't want to cover, but it is available as a fallback if you can't find private home insurance in the market now.
Last question before you go. Is it legal for insurance companies to drop you mid-policy, or do they have to wait until whatever it is that you've paid for has expired?
These are one-year contracts. There's no right of renewal at the end of the 1 year. If you violate the terms of the contract, they can terminate the contract. What would a violation be? Well, don't pay your premium, or if you've agreed to take certain steps around your property and then you don't follow through, those might be examples. But generally speaking, no, they can't drop you in the middle of the contract. But at the end of the year, you have no right of renewal. It's a year-to-year contract, and they retain the discretion to decide the next year, at the end of the year, that maybe the risk is too much and they're not going to write. And that's how it is not just in California, but across the United States. What I come back to, though, I think really the important message I'd like to share with your listeners is what's driving this is climate change. We've got to do more to reduce our reliance on fossil fuels, reduce greenhouse gas emissions. That's what's creating the events that are causing all these losses to cause the insurers to pull out. One question I think needs to be asked, though, is that why is the insurance industry investing $569 billion in the fossil fuel industry when it's the emissions from the fossil fuel industry that are causing the weather events that are causing the insurers to have to decline to write insurance? And why are they insuring that industry, right? When it's that fossil fuel industry which is contributing to the inability of insurers to keep writing insurance. So I think those are important questions. And then finally, we know something works, and that is investing more in managing our forests. And the federal government has appropriated billions, the state government has appropriated billions, local agencies, local organizations are doing forest management. We've got to get the insurers to reflect that in their models, the models they use to decide whether to write the insurance or not. That's a path to keep them in the market. We're going to make more of these investments in the forest. We're going to try to knock down that risk, but it's not going to help on the insurance front if the insurers don't account for it in their modeling. So that's a part of the package that is missing in terms of what the commissioner proposed, and it's something I hope he adds to what he's proposing.
Dave Jones, former insurance commissioner for the state of California between 2011 and 2019. Thank you so much for stopping by.
My pleasure, John. Thanks again.
Have a great weekend.